This is an important week with a lot of data coming in that will have implications on what's happening to the economy. Let's dive in. Before we begin, remember to like this video and subscribe for more economic updates. The overwhelming consensus is that members of the Federal Open Market Committee will leave the federal funds rate unchanged at 5.25% to 5.5% when they assemble for their second policy meeting of the year. Since the last SEP issued in December, inflation and other headline measures of the economy have come in stronger than expected. Observers will be especially keen to see how those impact committee members' newest assumptions on the future of GDP, inflation, and interest rates. Also this week, Congress has until the end of business on Friday to pass 6 funding bills in order to sidestep a partial shutdown of the federal government. Legislators managed to pass a funding package for several agencies earlier this month, and they're trying to hash out an agreement that would cover the government's remaining spending needs. The departments for which funding expires on Friday include Homeland Security, Defense, State, Treasury, Health and Human Services, Education, and Labor. This week also brings several measures of the economy's health, including key updates on the housing market. On Monday, the National Association of Home Builders releases its Housing Market Index for March. The index, which measures sentiment among builders of single-family homes, is expected to come in at 50, 2 points higher than February. July 2023 is the last time the index landed above 50, which indicates a positive builder outlook on home sales. Then on Thursday, we'll hear from the National Association of Realtors with its report for existing home sales in February. Economists project that a seasonally adjusted annual rate of 3.94 million homes were sold last month, which would be about 60,000 fewer than January. Also on Thursday, S&P Global will release its Manufacturing and Services Purchasing Managers Indexes for March. Manufacturing PMI is projected to come in at 51.8, although that would be 0.4 of a point lower than February. It also would be the third straight month the metric has landed north of 50. As for services PMI, that's expected to drop modestly from February, but should settle at 52, keeping it in expansion territory for the 14th straight month. And finally, the Conference Board will release its leading economic index for February later this week. Economists expect to see that the LEI fell by 0.2 of a point last month. If that holds, it will mark the 24th month in a row the measure has declined. That's it for now, but with so much happening, it's important to check back on Saturday to see what actually happened. Look forward to seeing you then. This is Devlyn Steele for Augusta Precious Metals, signing out.